Hello, everybody, and welcome to our Monday session. Like every Monday, 1 hour before the US equity market start with trading. Today is October 16, 2023. This is week 42, and my name is Jose Blasco. Let me say hi from the screen. Here we go. How are you, everybody? It's a pleasure to be here for you guys to get started with the preparation for the week ahead. It's always a pleasure. Anyway, so let's begin. If you're new to the sessions, what we do on the Mondays is that we get ready for the week. We look at 5 key markets: S&P 500 futures, crude oil futures, gold futures, dollar index futures, as well as Bitcoin futures. And we look at all those markets with the intention of, again, prepare for the week ahead, knowing that these 5 markets are probably the most relevant markets in the world from a point of view of size and everything else. And in that sense, understanding what to expect from such 5 markets hopefully guides you into understanding better what to do with your own trades, no matter your trading style. I'm going to be using, as you can see on the screen, real-time charts. I'm going to be using daily timeframes for this analysis. We're going to do this in 10-15 minutes. And of course, the same type of application that you will see me put in place is something that you could also do with other timeframes if your trading style is different. So let's begin. And also, by the way, for the ones of you that don't know yet, we also produce the information I'm about to cover in a format that we call a newsletter. So I'm sharing with you on the screen a QR code, also with a URL, so you can go and subscribe to the newsletter. It's free. And basically, in this newsletter, you're going to see the 5 markets I mentioned before: S&P, crude oil, gold, dollar, and Bitcoin. And then we go into some specific statistics about those markets, as well as pictures of the charts with indications in them, such as buy on field orders, sell on field orders, entries, exits, all of those things. But anyway, so let's begin one market at a time. I'll take a little bit extra time with the S&P 500, and then I will fly through the other markets so we can cover all of them in a limited amount of time. So first market to cover is the S&P. And we look at the markets in 3D, isn't it? So the first dimension is what we call the climate, which is what you see in the bottom part of the screen, which is being actually covered with the QR code. Let me get rid of that. And here we have the climate here with a red thick dot. So a red thick dot means that we are dealing with a down climate, down because it's red, and most importantly, this climate is confirmed because the dot is thick. Notice the prior dots, apart from being blue, notice how the prior dots were thin instead of thick. You can see that this is something that changes through time, given the dynamic nature of the markets. And currently, we are dealing with a confirmed climate to the downside, so the expectation will be for the S&P to move down. Statistically speaking, this is what should happen. And talking about statistics, a normal thing to happen, a one-standard deviation of what is to be expected, would be a move to the downside of 3 candles in this particular time frame, the daily time frame. We are candle number 1, and we expect a normal thing to happen to be 3 candles on the way down. So yeah, a little bit of a down condition in the marketplace. Of course, not the end of the world. It seems that it's going to be 3 candles on the way down based on statistics. Of course, it could be more. You can see how the prior wave to the downside surpassed many more than 3 red dots. And this is because statistics is not a guarantee. Statistics is a great reference, but not a guarantee. So if you are new to what we do, if you are new to trading, make sure you manage your risk and you have contingency plans, such as using stop orders or other things, in case the market moves against you. If you're experienced, I don't even need to say that. Anyway, so down climate, statistically speaking, and now what? So let's say the market falls and it keeps going down. When it gets to where the green UFO, where UFO stands for on-field orders. So when we get to where the on-field orders to buy are, the expectation would be for the market to stop falling and now begin rallying. If instead of going to the green UFO, the market was to actually change its climate and go back higher, and then get to where the red UFO is, which is sell on-field orders, from there we would expect the market to fall down. So the UFOs basically are upcoming turning points. That's what they are. And in other words, you can use them quite efficiently for entries or exits. And it could be used by itself, or it could be used combined with other techniques. Maybe you're a Fibonacci trader. Maybe you use support and resistance. Maybe you look at some price action. You name it. There are many ways on how to trade, where many are definitely adequate and many are many don't make sense. But anyway, that is in the end the job of a trader to define their trading style. So I am sharing on the screen another QR code with a link for you to go take a look at our technology on our website. The auto climate, for example, we have in the bottom part of the screen is a free tool. And definitely adding statistics into your understanding of what is a market condition, as I said before, is not a guarantee, but definitely a very smart reference that more often than not should provide the desired result, because that's what stats actually are, isn't it? Anyway, so this is the S&P, and then the last component for me to discuss before we move to the next market is what we call the expected moves that you can see here. So these values that you can see here on the screen represent the expected move in a daily basis, weekly basis, and monthly basis, which is 53 points a day, 117 points a week, 243 points a month. This is what is expected. And how do we know that? You may wonder. Well, we know that because we are looking at the prices of the options on the S&P futures, and we kind of like reverse engineer the pricing models. Knowing the prices of the options, we then understand what is the expected volatility that we then project using a one standard deviation, and that is 53 points, 117, 243 points. So that's for the S&P. So now you know what to expect from a direction point of view, what to expect from a next or upcoming turning point of view, and also speed of movement, which is the volatility. And next market in line is going to be the crude oil. So we're going to start with the analysis. Let's begin with the real-time charts. Let's load crude oil. 1, 2, 3. Here we go. So with crude oil, let me get rid of the QR code. So we have a climate which has changed. Is an up climate. Okay. We had a red climate. It was supposed to be 5. It was maybe 7 or something like that. And now we are in a blue climate, which is supposed to be 7 on the way up. Okay. Now, having said that, while we are in a blue climate and, oil is supposed to go higher, well, the reality is that we just enter a red UFO, and sell-on field orders are entering the market, and that may very likely bring crude oil down, and we may have one of those situations where we have a failed type of climate, like it happens sometimes. Again, statistics are a great reference, but in the end, what moves the markets up and down is the on-field orders. Okay, so far we can still see how our patented technology identifies sell orders more or less at current price, and therefore I would not be too hopeful to see crude oil go too high too soon, even though it could be wrong. And the technology also works in a sense using probabilities. So those on-field orders could be cancelled, and then what looked to be a potential fall in crude oil becomes, a continuation of the rally. Could be the case, but and I would not expect that based on the technology and the powerful assessment that is being done. So we got sunny climate. A normal thing to happen would be 7. Sell on field orders at 87.76. Buy on field orders at 85.20. And a great increase in implied volatility in the options on crude oil futures, bringing the expected moves to be 2.44 points a day, 5.37 points a week, and 11.18 points per month. Next market in line, it's gold. So let's go take a look at gold. Let me load it real time first. 1, 2, and 3. So here is gold. And so what do we have? So let's begin with our climate assessment. So the climate is being sunny for 5 candles. A normal thing to happen is 6. Okay, so take a look at that on the chart. We've been in this climate for 5 blue dots. A normal thing to happen is 6. That's where I got that information from. So, having gold continue a bit higher could be the case. We may end up seeing a stronger rally on gold, given the fact that 1986.7, which is where the sell orders are, is quite further up. But at the same time, the current move is basically statistically exhausted. So we may get to see a new red UFO show up. And this is something that if you're a user of our technology, you may see as soon as tomorrow, where a red UFO shows up on the screen, something like that, something that is not on the screen yet, but when identified by the technology would be updated. Okay, so far we know 1986.7 is where the sell orders are, 1898.3 is where the buy orders are right now, real time, but this could change anytime, especially with a climate which is reaching its statistical end. I will not be surprised for this to happen, even though it hasn't happened yet. So I'm just sharing experience. I'm not sharing market data. I'm just sharing experience right now. Market data is sell orders 1986.7, buy orders 1898.3, and expected moves, also great increase in volatility for options on gold futures. 23 points a day, 50 points a week, 105 points a month. That is what is expected. Next market in line, the dollar index futures. We're talking about the dollar index, the real dollar index that some traders may call the Dixie, a product that in a futures exchange trades in the US. The futures exchange is ICE exchange, ICE US. You can also trade this product in ICE Singapore, which is 5 times smaller the size. Is a micro contract, pretty cool. And so we have, you can see, we talked about the buy on field orders the other day. So the dollar went to the buy on field orders, started going higher, and as the dollar started going higher, you saw the effect on some commodities. So climate for the dollar index, it's an up climate, 2 thick dots. Okay, so we are in a confirmed blue climate. A normal thing to happen is 6 on the way up. So we may see the dollar index to continue going higher. And by the way, no red UFO. No red UFO. This happens from time to time. Well, at this moment in time, it's happening. We have no clue where the sell orders are, which potentially opens the door for a powerful move to the upside in the case of the dollar index. Okay. Now, of course, as I said earlier, with I think it was crude oil or gold, if sell on field orders come into the market, our technology will pick it up, and you will see those red UFOs plotted on the screen automatically for you. So far, we don't have them, so we can only point at 105.46 as where the buy orders are, and levels of volatility for the dollar index similar to prior weeks: 0.52 points a day, 1.15 points a week, 2.39 points a month. This is what is expected. Last market in line is going to be our ICE CoinDesk Bitcoin futures, which is the Bitcoin futures contract that trades in ICE Singapore. Pretty cool contract, and you can see how we are dealing with a down climate, which is not confirmed on our newsletter. You will see this icon where you have the cloud and the rain, but a little sun showing up in the background, isn't it? You see that? Okay, you see that? So that means that the climate is not confirmed, okay, and therefore, in a non-confirmed climate, really trading one direction or another doesn't carry odds in your favor based on our technology. So probably waiting until tomorrow would be a great idea to see if the climate confirms in some direction. Sell on field orders in the case of Bitcoin, 27,342, buy on field orders 26,167, and speed of movement expected to be at a rate of 645 points a day, 1,400 points a week, almost 3,000 points per month, similar to what we had last week, a little less, I would say. Okay, so economic calendar, very simple one. Reminds me of my comments from the last week, where I mentioned that it was, from a point of view of economic reports, it was likely going to be pretty relaxed and quiet. Of course, we're talking about RBA meeting minutes in Australia, or consumer price index. All of this already happened, by the way, because that was Monday in New Zealand and Australia. That is indeed important. Unemployment number in the UK, GBP. So obviously very important. Okay, but again, as always, we are talking about retail sales consumer price index in North America, Canada, US. Given the major sensitivity that is happening in the world when it comes to inflation, and then also kicking in on Wednesday with a consumer price index, the CPI, which also measures inflation in the UK. So that, I would say, is probably the most important news. Again, inflation, and therefore what's going to happen to the interest rate, and all of that talk that is happening for a few months now. No, actually for more than a few months, a year and a half or so. So all of this is probably still going to be the most relevant piece of information in the market, putting on the side the fact that we have wars going on in multiple countries at the same time, unfortunately, and if they were to get even more heated than what they are already, who knows, right? So volatility can spike up, and again, contingency measures, risk management always need to be in place. And by the way, as a trader, all of this is also a source of opportunity. So that's what it is. Anyway, so our book, as always, super proud. You can follow the QR code on the screen and go get our book. When you get our book, not only you can get it in paperback or ebook format, but you get a book who won awards in three different categories in Amazon. So that's cool, and we're proud of that. And also with the book, you have access to a free course as well as our technology as well for a number of months. So I welcome you to go take a look, find out more about it. If you have questions, for sure you can connect with us. But definitely, if you're serious about trading, for the price of a book, you get a course, and you get tools for you to plan and execute your trades. So you have the tools to acquire knowledge and the tools to develop your skill through practice. You just need to be serious about it, which probably you are if you're watching this. So that's where you want to go. Anyway, everybody, you guys take care. It's been, as always, my pleasure to work with you in this getting organized at the beginning of the week. As always, see you in the next one. Take care. See you soon, everyone. Bye bye. Take care.